Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Friday, December 16th, 2022. Big sell off on Wall Street on Thursday, Apple included, after having earlier in the week on Wednesday and on Tuesday and a little bit on Wednesday, actually, attesting once again this trend defining longer term resistance that is today at 146.51, a descending two-thirds speed line projected off the August high, and below which still anticipating 123.48 as a 1 to 2 month downside objective. So we are on our way to that. Before I jump into the other parts of today, I have to ask you to please click like, if you would, each and every time you watch the daily Apple report or the daily Tesla report. It helps us out a great deal in being found on YouTube. Also, subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded to our channel. That includes the daily Tesla and daily Apple report. And starting in January, we're going to be offering the daily NVIDIA report. And so there you have it. Now, we also settled in the midst of this sell-off on Thursday below a key support, near-term support at 137.87. It's a level that I weighted as just 2 stars in light of the fact that we were still below this longer-term resistance at 146.51 and heavy into January below it. 137.87 is our ceiling for the day and into next week. In fact, holding below 137.87, we have a secondary sell signal that should. Now, I've got 134.37. You can't ignore this double bottom here at 134.37, but double bottoms are made to be violated. In other words, triple bottoms are much rarer than double bottoms. And so it wouldn't surprise me in the least to see us violate 134.37 today. Now, we could bounce nicely off it. I still think it's well suited for aggressive day traders, but be careful because holding below 137.87, I think we could, by the end of next week with the present volatility, test 127.33. And so this is where I was saying if we close below 137.87, we could within 2 to 3 weeks test the 123.48 area. But on the way down, this descending channel bottom, it's off of the early November high, maybe that was late October, sorry, against the more recent high from Tuesday, against the intermediate November low. It is this channel structure here, 127.33. We're not going to see it today, but we could see it by the end of next week. It's dropping gradually, and by early January, it actually coincides with 123.48. So I probably could have drawn that here on this chart, but 127.33 is this channel top coming down like this. And over the next couple of weeks, it converges with 123.48. 123.48 is now our realistic 2 to 3 week objective. As I've been saying, once we settle below 137.87, 123.48 is the start of a wide zone of long-term support down to 119.34. This 119.34 is a rising two-thirds speed line projected off the March 2020 COVID low. And so this area here, 119.34 to 123.52, able to contain selling through Q1 and even into later 23. And it is, I think, a realistic 2 to 3 week target now below 137.87. So let's talk upside today, that if we happen to push or open above 137.87, we might reach 141.99, which is not altogether different than yesterday's 141.80 high. 141.99. That may be it for the day. I will say that if we push through 141.99, which is well beyond yesterday's high, that we could, by the closing bell, retest 146.51. I will, before I leave this chart, which chart? Where are you? Here we are. If we close above 137.87 and the market doesn't rally significantly, but merely settles back above 137.87, if you went short on that information, anticipating, the 120s over the next few weeks, that may still happen, but it's going to be delayed. So it depends on if it. I'll let you work that one out.
Just so you know, a wickedstocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below.
If you bought 125 out of the money puts that don't expire for yet only another 2 or 3 weeks, you may liquidate that. If you bought 125 out of the money puts that don't expire for at least a few months, then you can hold the phone here and allow the market then to, in the interim, over the next 3 to 5 days, rally back to the 146.51 speed line, which is our trend defining resistance through January and below which the 123.48 area expected over that time horizon. Inversely, it's not going to happen today, but if over the next 3 to 5 days we do close above 146.51, then we have a near term buy signal up to 157.52. And by near term, I mean within 1 2 weeks at the very most. 157.52 also able to contain monthly buying pressures, and if settled above, would then pivot the market aggressively upward as we move into January, February. The following 1 to 2 months of closing above 157.52, I would expect the low 180s, 180.78 in reach within a couple of months of closing above 157.52. But if we close above 146.51 and you are itching to go long Apple on a longer term basis, say into later Q1, you have quote unquote my blessing. But just know that you're going to have to endure, I think, some consolidative trade for a number of weeks until we then get up and over 157.52, which should launch a more aggressive vertical move as we move into January, February. And that is all repeat of what I've been saying now for the last month or so. I think that pretty much summarizes it for Friday's Daily Apple Report. Please click like if you would and subscribe to the Wicked Stocks YouTube channel. I'll be back Sunday afternoon with Monday's Daily Apple Report, and you have a great weekend.